Good morning. Today, inshallah, we are going to discuss the conceptual framework in accounting. I will be handling the lesson plan, which will include plan for whatever we covered during the class. First of all, we are all getting lesson plan. As you can notice here, our aim today is to provide a basic background over the conceptual framework. And actually, at the end of the class, we have to be able to describe the usefulness of the conceptual framework, the effort to construct a conceptual framework, and to understand objective financial reporting, and to identify the qualitative characteristics of accounting and the basic elements of the financial statement. At the back of the paper, you will find the timetable that we are going to follow. So please. What is conceptual framework? Conceptual framework is the outline of the guideline that we are following in order to make a framework. This framework will include the limits that we cannot exceed, we cannot violate, in order to make a consistent accounting standard. A consistent accounting standard, which means it will state the basic principles, assumptions, constraints, the basic elements of the financial statements. All of that for one purpose. This purpose is to provide information for the users of the financial statements. And who are the main users of the financial statements? Creditors, investors, and others. Because actually we have other users of the financial statement. But mainly we are concerned with two main users, the investors and the creditors. Because both are interested in our financial statement in order to safeguard their investment or money. So actually, the objective of the financial reporting always is to provide information. This information must be useful. It will enable the user in order to take more useful information, more useful decisions, in order to save their investment in the company. First, we are going to go for the second level. This was the first level, and we will move to the second level, which is the qualitative characteristic of information. Because accounting is always about numbers, actually we have to set some criteria, some characteristics that we have to take into consideration in order to provide more useful information. Which means we are trying to distinguish between the more useful information, better than the inferior information, which means more useful and less useful. Actually, when we are talking about that, we have to take into consideration that in order to provide information for the capital provider, we have a main constraint, which is what cost has to do with the information to be provided. How do we consider the cost as a constraint? How can we consider cost as a constraint for providing information? How we can provide information? Preparing financial statements. Actually, the financial statements has cost for accounting to prepare that financial statement. In order to be published publicly, we are paying money. So actually, all of those to be considered as cost. So actually, here we are emphasizing that we cannot pay money unless this information to be considered more useful. In order to justify the cost that we already paid. This is why we set this criteria. This criteria will determine what information to be included in order to justify the costs that have been paid for providing that. Actually, we have two main sets of characteristics. The first one, which is the fundamental qualities, and the second, which is the enhancing qualities. First, which is the fundamental quality. We have two main fundamental qualities, the relevance and the physical representation. Actually, the first, which is relevance, is to be relevant. It is when accounting information must be capable of making difference in decision. What do I mean by making difference in decision? Which means it will affect my decision. يعني whenever this information will be there, خلاص, actually they change their decision about that. Can you give me an example? For relevant information. Did you study managerial accounting? Relevant cost. Whenever we are taking decision regarding مثلا to buy part of a product from outsider or to make it inside, we have to consider only the relevant information, right? Which is the variable cost. So actually, if you don't have that variable cost, you cannot decide whether to accept yes or to reject the order. Actually, in order for the information to be relevant, to make difference in decision, it has to have predicted value. What do you mean by predicted value? Which means it will help me to provide information in the future. Right. How can we use the information as a predicted value?
According to the information, I will decide future decisions.
يعني for example, if you are talking about مثلا the share price, can we predict the share price? Yes, we can. Using the dividend of the current year, the income of the previous years, right? Which means we can make a forecast out of the previous or the historical data, right? So actually, whatever information to be included in the financial statements, it can be used for predicting values. Those values will affect the decision of investor or creditor, right? So actually, it has a predictive value. It can be used to predict something in the future. Second, it has to have a confirmatory value. Actually, relevant information must help user to confirm or correct a prior expectation. So actually, we predicted that the price of the share will go up. So actually, next year or after a while during the year, another information to be published by the company and telling me that the price share had already increased. So actually, this type of information that has been released by the company confirmed my prior expectations, which means it has a relevant value for me, which means it affected my decision. Maybe it confirmed my previous expectation, maybe it disconfirmed my previous expectation. It is still to be considered as relevant information. Materiality. All of this information must be material. What do you mean by material? Important. Can affect the decision, which means if you are talking about a very small number out of total assets that مثلا valued at $1 billion, and you are talking about you lost one of the assets, that is مثلا worth $100. Actually, this is immaterial amount to be included in our annual report. So actually, the material information only will be considered in the relative to a larger number, like the total asset or the net sales of the company. And whenever you decide if this amount is material or not, you have to compare it with another number. In order to compare it, we have two main grand totals to be compared with. One of them is the total asset, and the other one, which is the sales. Yes. In order to be relevant, it has to have the information predictive, confirmatory, and materiality. One of you tell me, what do you mean by predictive value?
The value of the forecast the future values.
Okay, using current information in order to forecast a number in the future. Yes. And confirmatory value? Confirmatory value? The confirm what I already expected before. Okay. And the materiality?
The information is important.
Okay.
And affect the decision. May affect the decision.
Yes, very good. Okay. So actually this is the first one of the fundamental qualities. The second criteria is the faithful representation. What is faithful representation? which means actually that the numbers and descriptions match what really exists for A, which means that the management, who is responsible for issuing the financial statements? Management, right? So actually we are telling management you have to be faithful. You have to present all the actual transaction. You have to include all the numbers that actually happen, actually exists. And this is what we are checking on in auditing. You remember the management assertions, okay? Which means the management should assure that specific criteria have been taken while they are preparing the financial statements. And me as an auditor, I will go and check, did the management follow that or not? يبقى faithful representation, we are talking about that all numbers in the description match what actually exists. Okay. In order to decide if it is faithfully represented or not, we have to have an information, a complete information, which means we have to take into consideration completeness. What do you mean by completeness? All information that is necessary for faithful representation is provided. Which means, if you remember, in auditing we said, if we are looking to the actual world and then we go back to the record, this is completeness. We check that we have 10 trucks outside and we went back to the records to make sure that all the 10 trucks are already recorded in the books. So actually this is a completeness. Okay? Information also must be neutral, which means that the company cannot select information in favor of one set of interested parties over another. What do you mean by being neutral? Providing all information, bad or good. Not to be biased to any side of the interested parties in the organization. Not to the shareholders' interest, not to the management interest, not to the government interest. You are providing a faithful information. Neutral information. Free from error, which means information items that is free from error will be more accurate and faithful representation of financial, which means that we have to check once and twice for the information before we post it, before we issue it to the users of Okay. So actually those are the two main fundamentals. We have then the enhancing that we are trying to enhance those. Actually, in order to enhance the qualities, we have to provide a comparable information. Comparable information. What do you mean by comparable information? Can be compared to what? Okay, this is why in our financial statements, we always presenting a comparable year. Right? When we are providing the financial statement for 2015, for example, you will find 2014 to be presented, decided. Why? In order to make it easier for the user to compare the performance, to decide on the performance of the company. So actually information that is measured and reported in a similar manner for different companies is considered comparable. The same to be whenever we are using, all of us, the same standards for preparing the financial statements. So actually we can compare the result of operation of one company with another company. Why? Because actually we are using the same standards. We are using the same rules for preparing the financial statement. And this actually will enhance the quality of the information. Verifiability. Okay, when independent measurers using the same method obtain the same results. Which means if we are in the same industry, we have to use the same accounting methods that is suitable for the same type of product or service that we are providing. Why? In order to get a consistent results. Actually, in order to be verifiable, we have to have a clear step or the clear procedure to be used in order to calculate the value of a specific account. For example, if I calculated the depreciation for a specific asset, and actually this asset resulted in a depreciation expense of 100,000 for each year, and one of you came and reviewed that after me, and he reached for the same amount of depreciation, actually we conducted verification. We made sure that two different people done the same procedures and we reached for the same conclusion or result. Okay? And this is what the auditors do. Because actually the auditor is verifying the information that is already exists in the financial statement. خلاص and providing at the end of the year ايه at the end of the audit ايه audit report and this audit report will tell me shall I trust the company خلاص trust the numbers in the financial statement or ايه timeless. All the information must be available to decision maker before it loses its capacity to influence timing. Timing is very important. Yes, you have to provide information. You have to provide information that is actually reliable, but at the correct time. Which means that you have to check on that information that it has capacity to influence the decision. Actually, it is material, it is relevant, it is faithfully represented, which means that we have to provide it on time for the user. The last but not least, which is understandability. طبعا we are assuming that whoever is interested in the financial statements, okay, at least he has a background for accounting. Actually, he must be able to understand what we are providing. But this will require us also to provide the information in a format that is understandable. Which means to provide it in more simple format, in more simple presentation, in order for all the users, even with a slight background of accounting, to understand what those financial statements mean. So actually, those are the main fundamental and enhancing quality. Right. What do you mean by verifiability? Yes.
To use the same method for two independent persons.
Yes.
And they have to have the same results at the end.
Okay. What do you mean by timeliness?
Influence the decision. To influence the decision.
To influence
the decision making.
Timeliness? No.
Provide information on time.
Provide information on time, which means if you are not going to provide that information on time, it will lose its usefulness. يعني if I knew now that the prices of the share prices of specific company has already risen a week ago, or increased week ago, this is not a useful information because actually it increased, and whoever took a decision already took the decision. So actually this is not any beneficial for me. now. The information must be on a time basis, which means to reach all the stakeholders, not the stockholders, at the same time. Okay. Actually, this is the part that I wanted to describe now. We are going to capitalize on that by showing a video explaining what we already discussed. And actually, I will get your feedback on that video after we finish.
Conceptual Framework, the objective of financial reporting for business enterprise is based on the need of the users of accounting information. There's a need.
Actually, this is what we are saying. All the accounting standard to be built on the needs of the user, which means that we are putting the user on the top of the pyramid, which means they are our core interest.
Who are the users once again? I know this is the third or the fourth time. Investors and creditors. What did we call those two groups in the first chapter? We call them capital providers. They provide capital to the company. What's capital? Capital money. They identify the qualitative characteristics. Now, okay, so we already know that the objective of financial reporting is to provide information. Well, this information cannot be any type of information. The information has to have certain qualitative characteristics. Now we need to take a look at the qualitative characteristics, and we need to dig into the qualitative characteristics. What are the qualitative characteristics? And we're going to have many of those, many terms we're going to be covering in this in this evening. Okay. So as we identify the qualitative characteristic of accounting, that's distinguished better, so it has to be more useful information than from inferior information. So it's going to give us some qualitative characteristics, not specific answers, but some qualitative characteristics. What are the two fundamental qualities for the information? The two fundamental qualities: the information has to be relevant, and the information has to be faithfully representing what's happening. So the first thing is the fundamental qualities. Okay? So the fundamental qualities are relevance and faithful representation. Now we need to explain what is relevance and what is faithful representation. Okay? So here we go. So we covered the objectives. Now we're going to be covering the two fundamental qualities. So we're going through this triangle. So the first one is the fundamental qualities, which is relevance and faithful representation. So let's go ahead and get started. What do we mean by the information is relevant? Well, for the information to be relevant, it must be capable of making a difference in the decision. Relevance means what? It means it's going to help me make a better decision. It pertains to what I need to know. It's relevant to me. For example, what type of information is relevant? For example, the equity investors, they're interested in the profit of the company. How profitable is the company? And how is the company generating their assets? How are they generating their revenues? How are they making profit? The information has to give me information. The accounting information has to provide me relevant information about the company. Okay? Now, there's ingredients. So what are the ingredients of those of relevance? So what does relevance mean? Well, the information has to be relevant, okay? Then it has to have some sort of a predictive value. What do we mean by predictive value? Well, predictive value means it can help us, the information that they give us, it can help us forecast the future. So you're going to give me old information, obviously counting, it's old information, but this information is going to help me project or forecast the future. Project the future. Predictive means what? The information can help you form expectation, okay? And do what? And see if those expectations will be eventually materialized. So it has to have some type of predictive value. It has some type of forecast value, projection value. I can take this information and look at the future and project based on the information that I am using. So it has to have a predictive value. So predictive means it has a value. Financial information has a predictive value. If it has a value as an input to predictive process used by investors to form their own expectation about the future. Give me information. Give me information. Tell me, what is your account receivable? What does account receivable tell me? Your account receivable tells me how much cash you will be collected in the future. Okay? So the account receivable tells me how much cash you're going to be collected in the future. Well, if you give me year 1, year 2, year 3, let's assume sales growth was 5%, 5%, and 5%. Well, year 4, there's a good chance it's going to be 5%. So if I can take a look at past information, and this past information, since it's going to be consistent, can I project, can I forecast the future? This is what predictive value is. The information has to have some type of conformity.
This is what we said about the predictive value, which means here you can use any number of the financial statement, with some basic estimations, and you can reach for a number in the future. Which means, as he explained here, we can use the accounting receivable in order to predict the amount of cash to be collected for the next A period. طيب.
Conformity value, sometimes it's called feedback value, sometimes it's called, has to have feedback value. Relevant information also help us confirm or correct prior expectation. So, give me information that's going to either confirm what I thought it's going to happen, or tell me you were wrong about what you thought it's going to happen. So the information that you provide to me, it's going to tell me that what I thought was that correct or not. Okay? This is going to confirm. It's going to give me feedback. Give me information that's going to give me feedback. Well, let's go back to account receivable. You had $100,000. I predicted that of this $100,000, you will be able to collect $90,000. This was my prediction. Prediction from the predicted value. Then what happened at the end of the year? You told me you collected $95,000, or you collected $85,000. Well, it did confirm what I thought. Well, at $95,000, I underestimated. $85,000, I overestimated the collection. But the information that you gave me confirmed what I thought it's going to happen. Okay, so the information has to be conformed. Okay, what is materiality? The information has to be material. Information is material, so this is the definition of material. If omitting or misstating. So if you don't show it to me, or if you inflate or deflate the information, if you omit means don't show it, if you omit or misstate, and misstatement could be overstating something, or understating something. Okay? Information is material. If omitted or misstated, it could influence my decision to form some type of a basis about the company. So give me all the information. First, give me all the information, and don't keep out anything. If this information is capable, if the information is capable, let's put it this way. If the information is capable of making a difference, if you think the information is capable of making a difference, then include the information. So please don't exclude anything. Give me all the information that I need. Don't overstate it, don't understate it. Give it to me in the best way. Now, materiality. There's no figure for materiality. So what's material for one company may not be material for other companies. For example, a company like Apple, maybe $500,000 is not material. That's basically a pocket change for Apple. But a company like a medium-sized business or a small business, $500,000 is material. So materiality, depending on the size of the company, depending on the account that you are misstating. So materiality cannot really define it by a number. It depends on each situation. And as you are learning about your knowledge, you're going to learn about materiality and what's material and what's not, and how do you work.
And this is what also we explained before, which means that we said always, in all cases, we always have to relate the amount we are going to decide whether it is material or not to a relative number. This relative number, as we said, always will be maybe total assets or the total revenues that have been generated by the company. Right. Up till now, anyone have any question? Yes. Materiality means if you are deciding if this amount must be disclosed in the financial statement or not. As the examples that have been given now, for Apple, $500,000 is not that material amount. Why? Because actually, the number of revenues of Apple may be billions of dollars. So actually, if you are going to get a percentage of these 500,000 out of the total revenue to be achieved by Apple, it will represent maybe 0.005 or 1 or whatever out of the total number, which means this is not a material amount that I would like to show to the reader of the financial statement, and their omission will not affect their decision about the company. Okay? Thank you. What else? In order to capitalize on whatever we explained, I will distribute a formative assessment test. This formative assessment test, we're going to get 10 minutes to solve. And then we're going to discuss together. Please solve it and keep it with you. Now, anyone didn't sign the concept? finish, we are going to please keep the paper, and actually we are going to solve it together. Please make a check for correct, if the answer is correct, and be honest. Okay? And if you have a wrong answer, please write a wrong, because actually this is a formative assessment, which means it is not summative. We are not going to add it to the coursework. We did it only to check your understanding. Right. The first question was, of course, you are going to select one of those terms in order to match one of the statements that already include. Right. The first statement was a stable dollar assumption. Don't use historical cost principle, which is monetary, right? Yes. Right. If you did it C, please check correct. Right. 2. Key factor is when the performance obligation is satisfied. What is your answer? A, which is F, revenue recognition. Why did you select F, revenue recognition? Because he is saying the key factor is when performance obligation is satisfied, which means we are not caring about the flow of resources. Whenever the transaction to be recognized or done, we are going to consider that as a revenue. 3. J. Presentation of error-free information. It is faithful representation. Okay. Right. Number 4. Yearly financial report. Periodicity assumption. Yes. Right. Number 5. Okay. Recording annual depreciation, which is expense recognition principle. Right. Right. Number 6. Okay. Useful standard measuring unit for business transaction. It is monetary unit assumption. Right. Number 7. Notes as part of necessary information to a fair presentation. Age, full disclosure principle. Yes. Right. Number 8. Affairs of the business distinguished from those of its owners. Economic. Yes. Economic entity. Number 8. Right. Number 9. Valuing asset and amount originally paid for them. Okay.
Number 9.
Business investment. Okay, number 8. I'm sorry. Number 10. Historical cost principle. Right. Number 11. Application of the same accounting as in the preceding year. Okay. Right. Summarizing significant accounting policies. C. Full disclosure, yes. Presentation of timely information was predictive and feedback values. GOR. J. Which is Google more than 8. Google more than 8. Google below 5. Below 5. Below 5. Right. Now actually we are going to make more practice about this part by referring back again to our PowerPoint here, trying to discuss another case or another exercise taken out of the concept that we already discussed, which is telling me to identify the qualitative characteristic to be used given the information provided. Actually, the first is we are saying that qualitative characteristics being employed when companies in the same industry are using the same accounting principle. Right. Actually, I'll give you 2 minutes. Solve A, B, C, D, and then I'm going to solve it with you. You can do it grouply. Each row, خلاص, each with each other. Each row to be considered as one group, خلاص, and solve it together. Qualitative characteristics, and I will select as a group, please. Qualitative characteristics being employed when companies in the same industry are using the same accounting principles. Okay. Quality of information that confirm users' earlier expectation. Confirmatory. Right. Imperative for providing companies of a company from period to period. Right. Ignore the economic consequences of a standard or a rule. Right. The second case. 2 minutes and then we will solve it together. No. Go ahead. require a high degree of consistency among individuals on a given measurement. Verifiability. Okay. Predictive value is an ingredient of this fundamental quality of information. Okay. Qualitative characteristics that enhance both relevant and faithful representation. Okay, the 4 ingredients. Okay. But 3, 2 minutes. Neutrality and completeness are ingredients of this fundamental quality of accounting information. Faithful, representative. Okay. 2 fundamental qualities that make accounting information useful for a decision-making purposes. Faithful representation. Because actually those are the 2 fundamental criteria. Issuance of interim reports is an example of what enhancing ingredients. Okay. Actually, we are going to go back for the element of the financial statement. What do you mean by the element of the financial statement? The element of the financial statements are the element to be included within each of the financial statements. Actually, we have, how many financial statements do we have? 5. Ways. What are those financial statements?
Balance sheet, statement,
In order? Income statement. Okay. Statement to change in equity. Balance sheet. Cash flow statement. And comprehensive, right? And actually those are the elements to be included in those financial statements. Right. The first, what is assets? Because the company owns. Okay, actually it is a sacrifice of resources. Okay, for a benefit to be received in the future. And what is the main difference between expense and asset? Both to be paid, but actually one of them to be recorded as an asset and the other one to be recorded as expenses. Why? Because the asset, we are expecting to receive a future benefit out of that. Like in expenses will be used immediately. You are going to get the benefit immediately, right? This is how we distinguish between assets and expenses. Like actually, what do you mean by liability? What the company owes to others, okay, or obligation resulted from a past event, which means the transaction has already happened, in order to result in a future obligation that will be settled by specific outflow of resources. Why I didn't outflow of cash? Because maybe the resources will be in cash, or maybe it will be other type of resource. Maybe I will pay in terms of inventory. I will pay in terms of services. Okay, this is why we are saying outflow of resources, not only cash. What do you mean by equity? It is the difference between assets and liabilities, which means this is the residual value of the asset after we subtracting the liability. Okay, and this is the interest or the investment that have been made by the owners of the company. Yes. Right. What do you mean by income?
Inflows, cash inflows.
Only cash? Or the inflow of resources? Maybe cash, maybe not. Because actually you are using the accrual base. And the accrual base does not necessitate the flow of cash in order to recognize the revenue or the expenses. And actually income to be resulted from revenue minus expenses. So actually, the income will be considered as an increase in the economic benefit. Increase to the equity of the company as a due of the operations that already happened in the And last, which is expenses, and it is of course the opposite of the income, to decrease the economic benefit during the accounting period in order to generate the income or the revenue. Okay? Fine. Let's capitalize on that right away. Arrive this from. Take 2 minutes and then we are going to look at them together. Okay. Like arises from reference or incidential transaction. Okay. Obligation to transfer resources arising from past transaction. Increases ownership interest.
Investment by owner.
Investment by owner. Comprehensive income. Why comprehensive? What is comprehensive income? What's comprehensive income? This is net income.
The difference between historical cost and fair value?
okay, the reflection of change in fair value for some items, خلاص, will be considered as a comprehensive income. As an example, ايه بقى؟ land. No. سامح.
The future does not present its
No. What are the exceptions? What the comprehensive income is to be used for?
monetary assets.
Monetary asset. As an example,
Stocks, shares.
short-term investment. Right? Short-term investment, خلاص. Trading or non-trading. اللي هو to be accounted for under the fair value method. اللي هو representing from 0 to 20% out of the ownership of the investee. This is to be considered, the increase or decrease in the fair value will be considered as a comprehensive income. The change happened in the foreign currency transaction. If you are going to make a deal in a foreign currency transaction and this deal will be exercised after خلاص 2 or 3 months, and every month the exchange rate will go up or down, we have to make an entry to adjust our values according to that change. And this difference will be considered as unrealized because actually the transaction خلاص did not happen yet. The transaction didn't take place yet. Okay, so actually this will be considered as a comprehensive income. Yes. ليه ما تبقاش revenue? Why it is not revenue?
Why?
Okay, because actually he is saying what the statement is saying.
Increases on it.
Okay, so actually if you are telling me that it can be revenue, but here we are concentrating more on the different items, the exceptional items that increase the equity. يعني whenever I'm defining the comprehensive income, it is the income to increase the equity other than revenue and expenses. This is why I didn't select revenue. خلاص. طيب declare and pay cash. Okay. Increase in net assets in a period from non-owner sources. And this is what I just said. Okay, yeah, 2 minutes. This one is small. 1 minute. Right. Items characterized by future economic, okay, is assets, equals increase in net asset during the year after adding distribution to owners and subtracting investment and paying before you answer. Comprehensive? Okay. Right. Arise from income statement activities that constitute the entity's ongoing major or central operation. Very good. 1 minute. Okay, residual interest in the net asset of the enterprise is why it is a residual interest?
So it's the difference between assets and liabilities.
Difference between assets and and after uncovering my liabilities, this is the residual amount that have been contributed by the investor. ماشي. Increase assets through sale of product. Okay. And this is matches the definition that we already, because we are increasing the economic benefit of the company. Okay. Decrease assets by purchasing the company's own stock.
Distribution to owners.
Okay. Change in equity during a period except those from investment by owners and distribution to owners. Okay. Because actually comprehensive income will affect the equity except for the investment by owner and the dividend to be distributed. Okay. According to the fast conceptual framework, an entity revenue may result from
A decrease in liability from primary operations.
think.
D.
D. Okay. Fine. So actually, this is the part that we wanted to cover today. Fine. Actually, at the end, if you have any questions, and I'm sure you have, related to the fundamental or the enhancing qualities and the element of the financial statement. Yes.
The enhancing is related to the fundamentals.
Yes.
Okay, I can't read it.
Well, actually, you have to take into consideration basically the relevance and the fiscal representation, which means at the beginning, when you are preparing the financial statement, you have to make sure that all the information that have been presented, that have been included in the financial statement are relevant, which means it is related to whatever the decisions that the investor or the creditor would like to take. And as I said before, in order to make sure, you have to present that information in a faithful representative way, which means you have to make sure that all information are correct, have been verified, okay, and this is why you are getting the audit. This is at the beginning. In order to enhance the understanding of the users, we have to apply the next step of the criteria, which is enhancing quality. So actually, I'm trying to increase the usefulness of information by making sure that this information can be comparable. Which means you can compare it in the same company with the previous year or with other companies using the same accounting standard. This is why all of us in Egypt we are applying one accounting standard, which is the Egyptian accounting standard. This is in order to enhance the comparability. This is maybe to be in the hand of the management, okay? But some of the enhancing quality maybe is not in the hand of the management. Because actually, if we are talking about standardized or unified standards to be used, this is not the decision of the management, but actually it is the decision of the professional entity responsible for issuing the standards.
Okay, if a standard didn't meet something like this.
Like actually, we have in the Egyptian accounting standard, we have an option. Whenever you will not find your answer in the Egyptian accounting standard, you can go to the international financial reporting standard. But at last, we have to take into consideration all of those. Because actually, this verifiability to be done through auditors or through internal control system. This one-timeness to be done by the management. This one, and also the management will be asked by the responsible authorities for the information or for the financial statement. Yani if you are a listed company in the stock market, the authority will ask you to provide the information on timely basis. If you didn't, you will be penalized. Okay? The understanding, this is the format. Also, referring back to comparability, which means you have to follow the same format that have been set by the local standard that you are using, or the international financial reporting standard. Okay? Yes.
This concept framework is applied in Egypt?
Is?
Applied in Egypt.
Yes, it is. Because actually, in Egypt, we are using the Egyptian accounting standard. And the Egyptian accounting standard is no different from the international financial reporting standard. Which means we are applying the same concept, the same framework. Actually, the differences will be in specific items that will be in clash with some rules or regulations that already exist. For example, for the leasing, And leasing, whenever we are dealing with leasing, we are dealing with a company that lease some asset to another company with an option to get that asset with a lower price than the market value. So actually you will find always that the installment to be paid by the lessee will be higher than the normal rent amount to be paid by any other company in the same market. Whenever we would like to apply specific concepts that is related to IFRS, you will find that some Egyptian rules are specifying a specific accounting treatment. And this specific accounting treatment we are obligated to apply, even if it violates the IFRS. But in total, 90% of the standards are in accordance to the IFRS. Any other question? Okay. Thank you very much. See you next class. Good morning. Today, inshallah, we are going to discuss the conceptual framework in accounting. I will be handling the lesson plan, which will include plan for whatever we covered during the class. First of all, we are all getting lesson plan. As you can notice here, our aim today is to provide a basic background over the conceptual framework. And actually, at the end of the class, we have to be able to describe the usefulness of the conceptual framework, the effort to construct a conceptual framework, and to understand objective financial reporting, and to identify the qualitative characteristics of accounting and the basic elements of the financial statement. At the back of the paper, you will find the timetable that we are going to follow. So please. What is conceptual framework? Conceptual framework is the outline of the guideline that we are following in order to make a framework. This framework will include the limits that we cannot exceed, we cannot violate, in order to make a consistent accounting standard. A consistent accounting standard, which means it will state the basic principles, assumptions, constraints, the basic elements of the financial statements. All of that for one purpose. This purpose is to provide information for the users of the financial statements. And who are the main users of the financial statements? Creditors, investors, and others. Because actually we have other users of the financial statement, but mainly we are concerned with two main users, the investors and the creditors, because both are interested in our financial statement in order to safeguard their investment or money. So actually the objective of the financial reporting always is to provide information. This information must be useful. It will enable the user in order to take more useful information, more useful decisions, in order to save their investment in the company. First, we are going to go for the second level. This was the first level, and we will move to the second level, which is the qualitative characteristic of information. Because accounting is always about numbers, actually we have to set some criteria, some characteristics that we have to take into consideration in order to provide more useful information. Which means we are trying to distinguish between the more useful information, better than the inferior information, which means more useful and less useful. Actually, when we are talking about that, we have to take into consideration that in order to provide information for the capital provider, we have a main constraint, which is what cost has to do with the information to be provided. How do we consider the cost as a constraint? How can we consider cost as a constraint for providing information? How we can provide information? Preparing financial statements. Right. Actually, the financial statements has cost for accounting to prepare that financial statement. In order to be published publicly, we are paying money. So actually, all of those to be considered as cost. So actually, here we are emphasizing that we cannot pay money unless this information to be considered more useful. More useful. In order to justify the cost that we already paid. This is why we set this criteria. This criteria will determine what information to be included in order to justify the costs that have been paid for providing them. Actually, we have two main sets of characteristics. The first one, which is the fundamental qualities, and the second, which is the enhancing quality. First, which is the fundamental qualities. We have two main fundamental qualities: the relevance and the fiscal representation. Actually, the first, which is relevance, is to be relevant. It is when accounting information must be capable of making difference in decision. What do we mean by making difference in decision? Which means it will affect my decision. يعني whenever this information will be there, actually they change their decision about that. Can you give me an example? For relevant information. Did you study managerial accounting? Relevant cost. Whenever we are taking decision regarding to buy part of a product from outsider or to make it inside, we have to consider only the relevant information, right? Which is the variable.